Hello, and welcome to the fifth of our Minds and Money 5 at 5 shows, and the first one taking place in the North American time zone. The aim of 5 at 5, 5 guests at 5 p.m., is to maintain engagement between investors and miners through a lively, interactive format during the current situation. In a moment, I'll be introducing our host for today, but before that, a few admin announcements. To make it as interactive as possible, please have your video switched on. We want to see what you look like. We want to see what you are drinking. We want to see the interior of your home studio, your home study. And also, you've got the opportunity to ask questions at any time. So you can either go to the chat function, which is at the bottom of your screen, or if you actually want to ask a question live, if you go to the participants button, you can go and virtually wave your hand, and my colleague Nick and myself will go and then highlight you, go and unmute you so you can ask your question live. We'll also be having some polling throughout the webinar where you can go and vote. And once again, being 5 p.m. and towards the end of the week, we encourage you to bring along a glass of wine or beer, or in my case, a gin and tonic to relax, sit back and enjoy. For this week's show, we have a star-studded lineup of guests. So without further ado, please let me, to go and introduce them, I'd like to go and hand the stage over to Brady Fletcher, Managing Director and Head of TSX-Venture Exchange. A warm welcome to Brady.
Thanks very much, Andrew. And thanks, Jim. It's more clap for everybody who's come out to join us today. And I got to say, it's exciting to see how quickly this industry specifically has evolved to adopt this entire remote work from home network across the globe reality that we find ourselves in after COVID. I mean, it was the very beginning of March that we were all in Toronto for PDAC, and you think about having, what was formerly 70,000 people all at one convention center, and now we've all adapted to find platforms like Zoom to be able to have these meetings and discussions and figure out what's going on in the markets, especially considering how dynamic and volatile they are. So Andrew, big thanks to you and Minds and Money for launching this initiative. I think it's a great social way for us all to get together and have a really healthy discussion. Before I introduce the panelists, though, do want this to be an interactive event, and I've got a couple curveballs for them as we go through this. But I think we have a polling question, though. So Lucy, if you could bring the first question up on the screen, please. While you're thinking about that, I thought I'd just give everybody a little bit of the view from the exchange world. Brady Fletcher, I head the TSX-Venture exchange for TMX Group. TMX Group being a big publicly traded company that operates communities and markets and technology platforms. We're most recognized for the TSX and the TSX-Venture exchange. What's really unique about that is this two-tiered capital markets where we work to incubate companies on the venture exchange. We have listings policies and flexibility to encourage entrepreneurs to be able to raise money, facilitate capital formation, and then as those companies develop and they prove out a resource, specifically a resource in mining, they're able to graduate up to the TSX and a globally recognized senior market. It's been really successful for us. We've had some 680 companies graduate off the venture to the TSX over the last 15 years. It now makes up roughly 20% of the S&P TSX. And people do forget that that's how the likes of Wheaton Precious Metals and even Canopy Growth Corp got started, was on the venture. And what's really exciting for me is sitting in this seat now, being able to see the entrepreneurs and the people who are building companies from the ground up and providing access to the investment community to participate in those early growth stage rounds. With COVID, the beginning of this year was pretty positive. We'd seen an uptick in new listing activity, an uptick in financing activity, and frankly, that all came to a screeching halt in March, which was tough for us all to adapt to. When we look at March and how quickly that kind of took a couple of weeks for people to hit the pause button, shift to working at home, adapt to a new reality, and what we've seen since we started launching some relief measures, including providing companies with extended timelines for their shareholder meetings or for having their shareholder meetings, filing their option plans with us. But then we also announced a couple of relief measures to provide additional flexibility on the actual financing front, like removing the 5-cent restriction that we have. That doesn't apply to the companies who are listed with us or who are here with us today, but the 5-cent restriction does just emphasize that we're here to help companies figure out how to access capital. It's a tough market out there. It's really tough to build a business in the first place. The companies that are with us today have done that phenomenally well and have a track record of success. So this is a great dialogue to have. And what we're trying to do is make sure that those entrepreneurs have access to capital to build the businesses they want to do. When we think about what we're seeing now, since we've provided those relief mechanisms, and as the world's continued to adapt to this work from home reality, where we get to see each other's basements and home offices, we've seen financing activity pick up. We've seen new listing activity pick up. We've seen activity in the mining space picking up, but then we've also seen the rise of some new industries as well. We've got our first company in the psilocybin space coming to market over the next month as well. And then we're starting to see technology companies in the whole remote work or the whole remote health and wellness industry pick up. And that's been a really interesting dynamic for us to see. And I think also partly driven by COVID. So sitting here at the exchange, it's an interesting seat for me. We operate the platform that facilitates capital formation, and excited to let this group talk more about what they're seeing as the entrepreneurs and investors.
Let me just jump in though, Brady. Let me ask you a question.
Yeah.
So you talk about the challenges around what the mining sector is going through. ValOre excluded, you have Chris Taylor and Darren Klinck on the line, and companies that are well respected in the gold space. And things couldn't almost be better for companies like that. So if we kind of talk about the inflows of capital to the gold space, you must be seeing it real time. Talk to us about that.
So typical, I thought I was going to get the first curveball, and you got to chime in first.
This is a party, baby.
Yeah. So, you've hit on a really interesting front, Jim. We're obviously big supporters of the Save Canadian Mining Initiative, which, for those who haven't come across it, it's pushing to reinstate the tick test, as well as a couple other market structure changes that following 2012, when the tick test was removed, there's a perception that that had a detrimental impact to our markets. And so when you think about what we're seeing, when you look across the entire broader resources sector, there's those top names like Great Bear, like Bluestone, who are continuing to be able to see the attention, and they have the access to capital. I'd be interested in Matt's thoughts on this, but there's a cohort of companies that financing them should be more challenging until they can actually prove out a resource and until they can attract that attention. And then I think there's a serious middle ground in there that used to be covered by the brokerage community back 10 years ago, but there's fewer brokers out there. And that reality is something that we're working to address. How do we give better visibility to those companies who are Great Bear 2 years ago, before Discovery Group really got involved in it, right? Think about what it was before you had some serious results, where you had somebody staking out a property, you had a great thesis. How do you get visibility for that story? And that's one of the biggest things that we're investing into now, is how do we help that type of company who's listed with us get better visibility out to the investment community? When you think about financing flows and what we're seeing right now, absolutely. Nano Explorer closed $25 million. Are more clean tech branded, given the graphene angle on it. That's a huge financing on venture, and we're seeing those types of deals get done by the top tier resources issuers. But when you get one level down, that's where we really need to be working to help open up some visibility and provide those entrepreneurs better access to capital.
Well, I will throw something in there, because Matt, for example, at Delbrook, always takes our meetings. It doesn't always say yes, that's for sure, but has said yes a number of times and been super supportive. And obviously there's some experts at an earlier stage that can understand and figure out if the opportunity is real or not. There's a screening process there. But what you're saying is there's bifurcation. So there's the Great Bears and the Bluestones of the world, and then there are the early, before they were an overnight success, there was a decade of hard work. Matt, what do you do to review these things? You obviously get calls. How do you separate the wheat from the SHAP?
Sure. Look, I think it's important to realize the value that the venture exchange brings, which is creating a market for more speculative type investment from time to time, things that may not necessarily make the threshold for institutional funds, but nonetheless, they can finance in a way where they're supported by an exchange with flexible rules. For us, we're typically looking at resource stage plus, not necessarily exploration, but the exchange is there, and it offers, access to global investors who have a bit of a different risk tolerance, I think, than some funds have.
Right.
Right,
but the entire spectrum of early stage right up to producers.
Yeah, absolutely, it's there, and it's an important part of the capital markets, right? As Brady pointed out, you wouldn't have your Silver Wheatons or your Canopies or anyone else if they didn't have the opportunity to get that venture type money. And it's a very unique market that doesn't necessarily exist with the same support in the US or in other parts of the world.
Yeah, I'd agree with that as well. I think it's a good point, Matt. And we're the venture exchange is something that is absolute paramount for companies such as ourselves. The fact is that a lot of the brokers, the investment advisors are able to focus on some of those smaller stories that aren't necessarily mid-cap, large cap, multi-billion sort of market caps with huge liquidity, but will actually take a view, and that provides the capital then for those entrepreneurs, as Brady was saying, to take those opportunities and really run with them and create value and build assets up that then ultimately perhaps are in the crosshairs for Matt and some of the larger institutions, and also for the companies that want to develop them or operate them. It's imperative.
And it's important, we have a standing rule here, and we're pretty adamant to take meetings with all sorts of different size companies, because you never know what the next, Bluestone will be. You never know what the next Silver Wheaton will be. So albeit, some not investable because of liquidity, because of market cap constraints, you still want to get ahead of the stories, and being able to have a listing and price discovery on the junior markets is an important aspect of building those companies up.
Well, so you guys are hitting on a very key theme though too, is the wealth creation and the growth that happens on this market. And it is a venture market. It's something that's really unique to Canada, is the ability for retail investors to participate in these companies alongside these entrepreneurs and management teams that are building really interesting businesses. And they don't all work out, but the ones that do, it's such an exciting place to play. And it's the reason that I actually really enjoy this job that I've got. Given that we're now 8 minutes above what my scripted timeline says, Lucy, can we close that poll off? Thanks, Jim. And apparently everyone thinks,
well worth it.
Apparently everyone thinks I'm a regulator. So
speak with such deference. Yeah.
Makes sense.
Not a drinker. So, there you go, Brady.
Brady.
Yeah.
Well done, sir.
Straight and narrow.
You fooled them.
So as I get into this, let's introduce the guests today. Jim Paterson, first person to chime in and throw a curveball, principal of the Discovery Group and chairman and CEO of ValOre Metals. Darren Klinck, president of Bluestone Resources. Chris Taylor, CEO of Great Bear Resources, and Matt Zabloski, the founder of Delbrook Capital. Welcome all of you, and thanks for joining us today. And given that Jim started this, curveball thing, yesterday was Earth Day. The Pope was out there saying we've been extracting all the resources from the earth. I actually fundamentally believe that mining gets a bad rap across the entire sustainability sector when you think about, how the commodities are actually used, the leadership Canadian mining companies have had in the sustainability space. But we are seeing a growth in ESG focused investing. So I'd like to open that up for a little bit of a discussion, and maybe Matt, we could start with you as a fund manager. How does that trend factor into what you're looking at, and then we can see how the companies are reacting?
Yeah, it's actually funny, the ESG situation at the moment. It's pretty prevalent with our LPs, mostly US LPs. It's something that's been gaining momentum. Obviously not wanting to invest in certain aspects of the mining space, particularly, the obvious ones, the coal sector and such. We are cognizant of that. We do not have any ESG specific mandates or restrictions, but it is an active dialogue. We do allow LPs to opt out of certain investment strategies or subsectors. We don't have any actually that do, but it's an active conversation. For us, the focus within ESG is much more on governance. We founded a shareholder gold council a few years ago, basically focused on governance. I think it's something, as much as I'm not sure everyone will agree with me on this call, but the governance aspect within the mining space, within the metals mining space, is something that we're really focused on, because we think there's a lot of areas for improvement there. So ESG is becoming more prevalent for sure, but between the E and the G, there's a lot of work to do. For us, it's on the governance side, but you have to be always cognizant of the environmental side. And we, reiterate, that part of the environmental solution can actually be mining. It can be the clean tech that comes out of the mining space, the copper, the lithium for electric vehicles, et cetera. We've all heard the stories. So as much as there may be a traditional, tar and feathering of mining, there is actually a bright light at the end of the tunnel with regards to some of the energy metals that are out there.
Well put.
Yeah, without a doubt. I mean, I think if we look at, we're all kind of in our homes or in our offices, our home offices, but if we look around in these rooms, everything in these rooms is either grown or it's mined. It comes from the earth in some way, shape, or form. And there's no doubt the onus is on us as the companies and the investors to hold the the leaders of the companies, the management teams to account, to do it in the most sustainable manner, to be thinking out in front. And as an old colleague of mine used to say, I mean, our job is really to take resource capital, which is in the ground, and turn it into human capital, and really build societies and communities. And at the end of the day, we need this stuff, right? If it's copper for your electric cars or to keep the lights on in your houses today. I think, Matt, you got a good point there, and we can continue to get better, but we're definitely moving up the curve, I have to say.
Right. Chris or Jim, do you?
Well done.
Yeah, I'll
Darren,
chime
you
in.
froze.
Yeah, I'll chime in. Yeah, I think I heard your question there, Brady. So yeah, I'm probably one of those parents that's a little bit annoying for my children to deal with, because I find when I look at the school curriculum, they'll often talk about conservation, but they won't talk about the source of anything that we use in the household. So we always have a two-sided conversation there. So there's always an acknowledgement in the Taylor house that if you're using something, it either was grown or mined out of the ground. So it gives a more balanced approach for, a responsible way to consume products. And we try to practice what we preach. I mean, we live very modestly, which is, I think it's a great role for a lot of other families to adopt, especially in advanced, Western economies. Consume less if you can. So it's one of the first lessons. But in terms of it, one of the things that I think needs to be thought about is, if you think about it in a broader context, what is the impact that mining has? We all know that if we're removing material from the ground, it's you're putting a hole in the ground or a series of holes in the ground or whatever the case is. But one of the exercises I made my kids do recently was taking out Google Maps and just trying to guesstimate what the total disturbed land area was from urban sprawl in Canada, and compare that to the total disturbed area from all mining projects in total in Canada. And if you sort of sum up all the mining projects in Canada and try to make a dot out of them, it would fit in a very, very small corner of even a very small community. So, the total disturbance in terms of footprint is a lot smaller than what people think. And that's the kind of thing to keep in context, is to balance off. And this is going to come into play now with the COVID situation, is the economic benefits of what we're able to provide, and, the benefits to families' health and safety of having employment versus, the sustainability question. And basically make sure that you're comparing apples to apples and everything within the appropriate scale. I've been doing a lot of home parenting lately, so it was the first thing that came to mind.
Everybody's got a third, fourth, and fifth job at this point with the home parenting. So Jim, we're about to hand over to you. You're a principal of the Discovery Group. You've been actively involved in marketing, corporate development activities for that group since 2002. You and I originally met in 2005 through that. So you've got 22 years of industry experience with everything from capital raises, acquisitions, joint ventures, spin-outs, RTOs, IPOs, and you're currently chairman CEO of ValOre, which is thankfully listed with us on the TSXV under the symbol VO. Why don't you tell us a little bit about what you're seeing?
Sure, and I'll just say that I think that picture that Minds of Money has that was taken when I was in high school or something. I look so young there, but we'll have to get an updated picture. Yeah, so I've worked with John Robbins since about 2002, and in 2016 we relaunched the Discovery Group, and we relaunched the Discovery Group after we had some pretty success with Kamenak, pretty good success with Kamenak. What I'll do is I'll maybe get Lucy to pull up the website, the Discovery Group website. And as she's, Lucy, you told us to give you a very clear cue. There you go. So there we go. So maybe just scroll down to, there are 8 public companies in the group with 1 to join in the next 3 or 4 months. We have a variety of companies in terms of the stage of development, the commodities, the size of the company, and the location. And really what it comes down to is we are an alliance. We focus first on people. We talked about ESG, in terms of that aspect of the mining sector. I think we've got a stellar reputation. Absolutely, we focus on understanding local communities and see how we can work in partnership with them first and foremost, and that's a critical element of our group. We have companies that start at an early stage, and really what we try to do is form a framework around really awesome technical minds or corporate minds and allow them to do what they do best. And in particular, Mr. Taylor, who's sitting right there looking down at his screen, and Bob Singh, I think would be great examples of how we got super lucky. And I hope that they enjoy some benefits of being part of our group, but just incredibly bright technical minds joined the group, and we wrapped the group around them and supported them and let them do what they do best. And Chris will talk a little more about it, but really, could you have a better success story in the exploration scene than Great Bear? I would say absolutely not. So that's just one example. Bluestone is another example of, and I've talked about this in other interviews, where you had a vehicle that had a negative working capital position and a small market cap, but because of the power of the Discovery Group, we were able to, first of all, acquire the asset from Gold Corp or stroke a deal with them and give us the opportunity to go out to the market and raise the money for the acquisition. And the strength of the group allowed Bluestone to do that. And then within a few years, looking back, Darren, you will agree that from that day, it's a very different company today than it was then, and it has really grown tremendously. So the group is one where we have a very flat structure. It's an alliance, and it's a focus on high quality people. And I would urge you to go to that website, discoverygroup.ca. You can click on companies to look at the companies. Tombstones, which is right at the very top there, you can see. You can click on that and just go through some of the deals, the financings, the M&A, and it's a very exciting group. And we'll talk a little bit about the craziness of the market right now, but I'll tell you that in crazy markets like this, groups like Discovery Group are out looking for opportunities, and we've actually done really well in terrible markets like this.
I can verify directly some of what Jim was saying, and it ties into what Brady was saying earlier too, is really how you access capital as an early stage company. And, having brought Great Bear into Discovery Group back in 2016, it's been 4 years, Jim, 4 years, if you can believe it already.
Yep.
But it was instrumental in opening up a lot of doors that we could walk through then to get the meetings we needed to raise capital. So, the Venture Exchange has been our home the entire time. The Discovery Group was a key part of us being able to get the whole Great Bear ball really rolling.
Yeah, and we both benefit, right? Or we all benefit. We all win, which is fabulous. Within the group as well, Lucy, if you just want to go to the ValOre website, you have a link there. I'm the chairman and CEO of that, and ValOre is one of the companies in the Discovery Group. If you go to the Discovery Group website, you see it's listed in alphabetical order so nobody gets pissed off. It's all there, fairly put up on the screen. But we have on the ValOre website, that was one of the links I sent you, Lucy, with the PDF file. But effectively, ValOre is one of the companies within the Discovery Group, and we looked at the success that Northern Empire, which was a Discovery Group company, and also Bluestone had in the last few years, where management teams of companies hadn't provided TLC, they hadn't invested in exploration, perhaps they didn't have the budget or the capital raising chops to advance their projects. And I was looking for, with ValOre, a project that perhaps needed some exploration that would benefit from discovery. So last year we acquired the Pedra Branca PG project in northeastern Brazil. We're using VO as the vehicle for that. We've got a great technical team that is quite good at exploration, and we can hardly wait to get unleashed on that project. We've got high insider ownership. There's been a lot of money spent by previous operators on the Pedra Branca project, so you can look into that in further detail on the website. But we say over $35 million. That gives us a great starting point. There is a lot of mineralization, over 50 kilometers in strike from north to south. We have 5 different zones that make up the resources. We believe that they are open for expansion. A lot of them are shallow and high-grade mineralization. That's what makes up the resource, 43101. We think that we can use this data and new processes and innovations that have been woven into the fabric of the exploration sector over the last few years to really advance the project, make discoveries, and stay tuned for our exploration program that should be announced in the near future. And the discovery pipeline is full, which is right up our alley. So just moving on, the next one, Lucy, can you bring up that PNG, that file that we talked about? And this is more like the market that we find ourselves in right now. And it's a market that Discovery Group and ValOre likes. It's chaos, it's craziness. Do you know that PNG we talked about, Lucy? We just see Andrew drinking his vodka.
Jim, I'm just happy to see your smiling face. It's better than any file.
It really is it's a game changer, isn't it, Chris?
I do like the profile picture they had of you. That was a few years ago. Like mine.
That was the 80s.
You know, the one they picked for me, my family calls it the fat daddy picture. So, like you look fat and you look like you're 10 years old. So congratulations. But not you.
You've come a long ways. I like it. So listen, this is just an image I pulled off of a website, an investment portal. So if you look at the top left of this image, you see coronavirus and that little green arrow pointing down. Stock market is cratering. There's a hand climbing off a cliff or climbing up a cliff, begging for help. There's either a young bull in the bottom left corner or a cow for the slaughter. And all these messages are mixed. In the top, you've got the return to normal could mean disaster for the stock market. You've got a little thing in the middle there saying that the coronavirus stock market rally powers back. Look at that image on the left below that point. The Dow is up 500, and just to the right in the same article, Dow tumbles 631 points. And then at the very bottom, we're entering a new bull market. Unbelievable confusion and chaos, mixed messages for investors. And the only point I would make here is that as a junior mining executive, I'm used to chaos and lack of capital and volatility. And I think that we all are. And guys like Matt are obviously used to it and conditioned to it. But the usual investor is not. So that's the market we see ourselves in. It's utter chaos and confusion.
Jim, use your crystal ball. Like, what does this mean? This chaos of conflicting points. Like, what does it mean? Like, what are we going to see now for corporate activity, M&A, that kind of stuff? What's your wisdom? Share your wisdom.
I do have a crystal ball. Absolutely, I can see the future. I can't, but I can look back in the past. And in other market downturns, in chaos such as this, definitely the strong survive. There is a bifurcation. The strong guys are out doing deals, and the strong companies can access capital based on their teams. And the good projects attract capital and merit it and deserve it. And M&A does happen. Deals do happen. My personal opinion is that the space that is the most exciting right now is precious metals, specifically gold. And I'm just throwing you a bone, Chris, just because I'm scared of you. But, you know, other than that, because obviously I'm more attracted to palladium and platinum myself based on Pedro Blanco, but I actually do believe right now the golds are moving big time, and it's going to be a very exciting time for M&A.
Hey, Jim, maybe you can just help us understand what's going on for you guys in 2020. You guys have adapted pretty well here to this new normal. What's the outlook into 2020 and beyond?
Well, for the group, I mean, you can look at Great Bear, you can look at Bluestone. They're just thriving, and there's more than surviving. They're thriving with ValOre. Stay tuned for the program, but basically, we just needed to be ready in a position that we could clearly communicate our use of proceeds in our work program. And then we could go back to our usual crew of investors that have supported us in up markets and down markets. So I just was waiting for some clarity on the ground before I went to that. But, you know, it's not business as usual, but the junior mining sector is never fantastic in terms of access to capital. And when it is, it's generally a market top. The red light should be going off. So right now, you know, we're just doing our thing and we're taking advantage of the chaos.
I think you've got some good targets there, though, don't you, Jim? I mean, this is, you know, definitely where opportunities exist. And I know in my past experience, and definitely in Bluestone, where you've had, you know, larger companies often come in, invest big dollars, and then often, you know, change a strategy for no particular reason other than new management team. You know, somebody wakes up in the morning and decides they're going to pivot to a different direction. You know, pick up the tent and leave, and then, you know, what's left behind but tens of millions, hundreds of millions of dollars of investment. And I think you guys have stumbled onto something that looks pretty interesting.
Yeah, we're very excited. You got to look in the context of the pricing and, you know, who owned the project at the time in that pricing environment, who the people were working on the ground at that time. So, you know, we don't judge anybody in the past. We just work through what they've given us. And you're right, there's some great targets there. They're right up our alley. They're near surface. We've got lots of data. We can hardly wait to drill it. And absolutely, we think there's, you know, a literal district scale potential. We're not using marketing fluff when we say district scale potential.
Well, that's a good start. That's great.
Well, Jim, I'm going to save a couple cues on you for later and see how we do on time. But I think it's time that we jump to the next section. So as we're queuing up Darren, final question for you is, where do you think the price of gold will be in 6 months' time? Is it above $1,600? Is it, or sorry, below $1,600? Between $1,600 and $1,800, $1,800 to $2,000, or $2,000 to $2,500, over $2,500?
Well, we have to believe everything Bank of America tells us, right? I think everybody in the sector saw that.
So hold on. This is a poll. Lucy, are you gonna put a poll up on the for us? Before you give answers? People are supposed to vote.
Do it.
So I have to wait to see where the wind's blowing before I tell people what I think?
There you go. You got to vote. You got to vote first.
Yeah.
Maybe I'll vote.
So while everyone's voting, we're gonna introduce Darren and let Darren actually start taking this question over. So Darren, president of Bluestone Resources, Cerro Blanco gold and Mita geothermal projects, generating a lot of investor interest right now. Obviously excited to have you with us today, and we've got 3 full screens of Zoom grid view people. Excited to hear what you have to say. So Lucy, quick 30-second poll here. What's the results looking like? Winner is between $1,800 and $2,000 an ounce.
Conservative.
Jim's looking surprised at that.
I put below $1,600 an ounce because I'm a real believer in fiat currency systems and the value of endless money printing. So just perfect. Someone had to take possession.
Well, you should be at the helm of Great Bear then.
Yeah, I'd have to say, I mean, that's where I voted 1,800 to 2,000 over the next 6 months. I think, you know, obviously it's reacting pretty good the last little bit. Interesting data point. I mean, for the listeners that are on, some of them may have not seen, but what Jim was referring to was Bank of America Merrill Lynch commodity strategist yesterday, I think, came out with a piece of research that, you know, indicated they felt that over the next 18 months, the gold price would rise to $3,000 an ounce. Interesting part of that story, I spent almost 8 years living in Australia, and I met Michael Widmer, that commodity strategist, back in 2009. At that time, he was banging the drum and pounding his fist on the table about gold going to $1,900 an ounce. You know, we all kind of looked at him and scratched our head. I was working for a gold miner that I was actually, you know, producing the stuff, and thought, like, wow, what would the world look like if that actually happened? And lo and behold, we know what happened after the global financial crisis in 2008. So I think, you know, Michael and his colleague there got a fair bit of traction and publicity yesterday, but, you know, they did make the call 12 years ago. So let's watch and see what happens.
So Darren, this is over to you, actually.
Yeah, very good.
Darren,
Thanks, Brady. Well,
why don't you start?
Yeah, for sure. So I'm happy to give kind of a quick update on Bluestone. I think Lucy's got a couple of slides she's going to pull up. So Bluestone, so only barely been in its current formation for 2.5 years. As Jim mentioned, John Robbins, our chairman, who is really a founder of this company and was involved with Kaminak that was bought out by Gold Corp for $520 million. Got to know the Gold Corp folks, and lo and behold, much like, I guess, in Jim's situation, where a larger company had come in and invested a lot of dollars, and for strategic reasons, you know, ducking when others are weaving and moving in other directions, decided they look to divest this high quality Cerro Blanco assets. So despite having invested more than $200 million in it, and of course, at a time, you know, in early 2017, where you know, capital was pretty tough to come by. But as a TSX-Venture listed company, we were fortunate to be able to acquire this for $18 million. Gold Corp retained a stake, and really over the last 2.5 years, we've invested some of that capital that obviously we raised to acquire the asset from Gold Corp. It's one of the highest grade undeveloped gold projects out there today. And really have been working on advancing. We've got the feasibility study completed, and have been growing the resource. And as we sit now, we're moving into engineering and optimization phases, where in 2022, this project actually will be producing high grade gold, estimated at a cost of less than $600 an ounce, all in sustaining costs. So you know, they say you got to be good to be lucky and lucky to be good. I mean, in today's gold price, that's a heck of a margin, a great business, and we're pretty excited about what's ahead.
Hey, Darren, let me ask you a question just quickly on the financing side. Congratulations on your financing this morning. It turned out to be great timing, and it looks like a pretty significant deal. Can you maybe just touch on some subsequent financing, specifically the additional capital, probably debt capital, that you'll be looking at in the next couple of months?
Yeah, you know, I think, thanks, Matt. We're really pleased. We were, just to bring everybody into the loop, and this is total coincidence by chance, but again, made possible the fact as a public company and on the TSX-Venture, and one that obviously has had a lot of support from those retail investors, brokers, advisors, institutional investors that do look to the TSX-Venture companies for the next sort of diamond in the rough. But yeah, so we announced this morning an $80 million bought deal financing, which has gone well. But of course, you know, to build mines, it does take significant capital, and an important part of that is the debt component as well. We've been working really hard on that over the last, in fact, 12 months. And so working with a group of commercial international banks, export credit agencies, and an international financial institution. You know, it's 12 months of hard work. We're probably still maybe 3 months away, I think, from moving through into credit approvals, but we're well on our way to pulling that package together. And yeah, this will be one of the next gold mines built here over the next couple of years, we believe.
And Darren, let me just jump in. So in terms of what they're looking for and what's sort of attractive about this project, I guess it would be like the operating cost, the margin, payback, those types of issues that or elements they're looking at.
Yeah, well, I think definitely from the investor's perspective, and Matt could chime in as well on the equity side, but definitely from the debt investor perspective, and you're dealing with the large commercial banks, many of which that have been doing project finance for decades. The head start, I mean, the de-risking, the fact, as I mentioned, that there's been a lot of infrastructure that's already been invested. The number of times I've answered questions from investors to say that you acquired something that had more than $200 million invested in it for $18 million. Like, that doesn't seem like a very, good business on whoever was selling that for, 8 cents to 9 cents on the dollar. And, the answer to that is that's correct. But, there's decisions that are made that sometimes don't make a whole lot of sense, and it has to do with timing. Look at where we're at right now. We're all at home, working from our home offices. Who would have thought that would have happened? It really has to do, it's at a head start. It's got great grades, and ultimately there's not too many businesses. I don't know if you're making gold bars, tennis shoes, trucks or cars that have the sorts of margins that we do in this particular asset, producing something for $600 and selling it for $1,700 today. So lots for us to be focused on.
I'll chime in too there, Darren. I mean, like, I remember when the deal got done, looking at the data, I mean, it's like geologically, it's like a no-brainer, your project. I hate to say it, but I mean, like, it's obvious, it's got the high grades, it's continuous. You even have exploration upside, which nobody ever talks about. But like, the question was always like Guatemala. So it was like, what do you usually say when people ask you about the jurisdiction? What's it like working in Guatemala?
I had never really spent much time in Guatemala previous myself, but my wife's actually from Mexico, so we've got a good chunk of our family from Latin America. I've been in and out of El Salvador many times and spent most of my career in Southeast Asia as well, and so other emerging markets. And I mean, the more that I go there, the more that I like it, and it's a lot of people don't know. I mean, Guatemala's had the most stable currency in Latin America for the last 10 years. It's got a BB credit rating. It's got a 10-year government bond rating that's cost of capital 30% less than you'd find in Mexico or Brazil. So, two jurisdictions we're much more familiar with. And in fact, Harvard last year ranked Guatemala as one of the 10 fastest growing economies in the world over the next 10 years. So it's well positioned. I mean, we find that it's been great. We've got great sort of local relationships with the local communities. The government's super supportive. We've got a strong workforce there that are really driven and focused. And I'm itching to get back down there. I haven't been down in I guess probably a couple of months. And but I look forward to getting back down again for sure.
Cool.
Well, it's just, it's such an exciting dynamic too, right, Darren? When you think about, we've got roughly 5,500 projects under exploration and development between all the TSX and TSX-Venture listed companies, and over half of those are in international jurisdictions. And so it's, the really exciting projects like those in Guatemala that you guys are on, and the mechanism of being able to finance that, as you noted, being able to vend an asset in, use your share currency to finance and make acquisitions, scale up. It's exciting for us to be able to support that. So thanks for being a great case study for us.
Thank you.
We're trying to keep this to under an hour. So I'm going to forge ahead, if that's okay, and jump to Chris Taylor, who's CEO of Great Bear Resources. Obviously, Great Bear's had a lot of investor interest. Your stock's almost doubled in the last few weeks. So, market dynamics aside, maybe you could give us a little bit of update of what's going on. And Lucy, do you want to pull up the Great Bear slides?
Yeah, thanks, guys. And I'll wait till the slide pops up. But yeah, basically, great to have a big gold discovery when you're in getting into the tailwinds with a cooperative gold market here. So it's kind of funny. Like if you go to the other slide, actually, Lucy, it's just a bunch of numbers. It's probably the best one to just start with. And really, like, that's the Great Bear story summarized in like a slide, is gold numbers. So like, honestly, if you like gold, Great Bear is a great company to take a look at. If you don't like gold, probably just run for the exits, because you know, it's really assay driven. And like, you know, this is a table, like Lucy's got it up in front of us now, but a couple of drill holes that we've talked about recently, you know, like we have this big LP fault discovery, which is like a 20-kilometer long gold bearing structure that we staked the majority of our property to cover. And that's why we're there. Like, we had a geological thesis. Bob Singh, our VP exploration, this was a project that he had in the back of his mind for over 10 years. When I first looked at the data like 5 years ago, it was obvious that there was like a real sort of potential here on the gold side. So we started drilling about a year ago, 11 months ago now. We've got about 100 holes into it now, this LP fault discovery. And it's amazing that something that was just not the normal sequence of rocks in an established camp like Red Lake. You know, Red Lake's produced 30 million ounces of high-grade gold in Ontario. And yet we went into a different package of rocks, but it made sense geologically. Like, you obviously can't pour water through your granite countertop, right? You have to crack it, you have to break it if you want to let fluids go through it. Well, fluids, hot water is what brings gold through. We found the biggest unstaked fault zone in this area, and we started drilling it after we staked the whole thing. And these are the numbers that we started getting out from the middle of it. So it's a geological thesis that fortunately worked out absolutely fantastically. And it was in, ironically, the shutdown rock. When most other companies in this area drilled in this region, they would drill into these rocks and they wouldn't even assay the stuff. So like, you can look at some of the numbers here. It's really what Great Bear is all about. High grade gold, really right to surface. If you look at the whole DNW 11 there, you can see that just below like a thin gravel cover, we're drilling right into like a couple 100 grams per ton gold. And there's wide zones of sort of moderate grade gold, high grade gold, and low grade gold around that. And this is for kilometers. We're drilling off like a 5-kilometer area. And if you go to the next slide, Lucy, and just show that one, there's an analog to all this, and it's really on the bottom right of the screen there. It's that's the Hemlo deposit. And it's quite interesting because Hemlo, like, this is like something that happened 30 years ago now, you know, so people are not overly intimately familiar with it, but geologists that have worked there have looked at our drill core and looked at their drill core. And Hemlo is important because it was a 23 million ounce producer. You know, and geologically, the rocks are very similar to what we're drilling at our big LP fault discovery. The strike length of the Hemlo deposit is about 3 kilometers long. You know, is about 8 meters wide on average, of about 8 grams per ton. And it looks like very similar rock, structural context, the whole bit, to what we're finding now along this big LP fault discovery. So we're drilling a 300 drill hole program, a $21 million drill hole program. It's the second biggest in Canada. So it's one of the biggest exploration drill programs in the world right now. It's fully funded. And there's just a sequence of results that's going to come out over the course of the year. So we really look forward to showing what this could be. It's early stage, pre-resource. Matt was talking earlier, and this is a pre-resource company. So we're sort of crossing that threshold, like Brady was talking about as well, is like, you're early on, and just to put it in context, this is something that people might not realize. Like, we're about a $400 million market cap today, so getting close to $500 million. Like 2.5 years ago, we were a $5 million market cap company. We were so small that we got a grant from a prospecting association and the Ontario government that you can only get if you have a less than $5 million market cap. And we turned that money, it was 150 grand. We turned that into drilling. One of our first holes was 10 meters to 16 grams, like right near surface. So it shows when you get access to capital and you have a good idea, it can happen. That ephemeral discovery that kind of drives the industry, it can happen. And fortunately for us, you know, it's many, many years of preparation to get to this point. But because of the cooperation with the Venture Exchange, early funding parties, and then bringing it into the discovery group, it kind of shows you a good formula for good people, good asset, and available capital in the markets. You know, you can go from a $5 million company to a $400 million company, and who knows, as we continue to grow, what we'll go to, obviously don't know, but it shows you how the whole process can work. So that's really the Great Bear thesis.
Well, so thanks for staying away from forward-looking statements there, Chris.
Yeah, exactly. Yeah,
Market cap.
it's my job. I live in a cloud of disclaimers. So, yeah.
So I've got some softball questions for you, but the first one I'm going to ask is, you put 2 slides up. One was all numbers around intercepts and what was included. Second one was a crosscut of what you're potentially looking at. If you're not somebody that's a geological trained expert, how do you look at those numbers as the average retail investor, and discern between, what a Great Bear is versus what a not Great Bear is? And the reason I ask the question is, there's been a lot of dialogue around the cannabis industry and other industries kind of sucking the air out of the room. And I actually think those industries have done a great job at bringing millennial investors into this market, engaging an entirely new demographic of retail investors that have a risk appetite to support entrepreneurs that have that vision. How do we as the mining industry now start to take those slides of numbers and simplify it to explain to that investment community who's now here and excited about participating?
That's kind of like a 3-in-1 question there, but interesting, because like for a long time I had the feeling that, especially in the millennial kind of demographic, people thought of gold the way they thought of like a pet rock, or something like this. Like it had no immediate sort of financial value. And I think right now people are going to see the difference between money and credit. Or debt, these kind of things. And gold is something that you can't hit a key on your keyboard and create it out of nothing. Fiat means like let it be, right? So it can't be faked. And it's the same thing with drill results when it comes to comparing companies. If it's real, look for the level of disclosure from the company that you're thinking about investing in. And somebody like Great Bear, we put every drill hole we drill ends up disclosed in a news release, every single one of them. We haven't, out of the hundreds of holes that we've drilled so far, we've disclosed every single one of them in a drill release. And what you want to do looking at comparable companies is, don't just look at the highlight numbers. They might have a few good holes up in front of them. Look at the complete disclosure. And if it's one good hole and 20 bad ones, there might be something wrong with the deposit, or if there's something wrong with the disclosure of the companies, if they're not being as transparent and forthcoming, that's another way to look at. So I think that's probably enough of an answer for your question anyway, is just look for transparency in the comparable companies and think about what gold might be actually worth.
Transparency is such a key thing for us on the markets as a whole. Jim, you just had a change of venue. Do you have a question to ask, or?
No, I know where I am and I know where I'm going. No, I think we need to hear from Matt or Chris. I've done my welcome.
Well, so there's actually a question from John Mark from Riverside Resources around, the discoveries you're making are amazing. They've got exceptional upside. What deposits in Canada would you find your geology most similar to? And when will you have an expanded resource that tests your and Bob's geologic theories?
Both. The most similar one geologically is Hemlo that we found so far in terms of rock type, basically felsic volcanics, mineralization type, disseminated sheet-like high-grade gold, and then basically alteration. There's silica albite alteration that's really, so geologically it's a heck of a lot like Hemlo. We've had a few Hemlo people. One of them was working with us, or is working with us on the resource prediction side. Jim Gray did hundreds of thousands of meters of drilling at Hemlo, resource drilling, so that's why we lean on those sort of expertise. In terms of a resource delivery, even a shallow resource we're drilling a 5-kilometer by 500-meter panel to try to put an initial maiden resource together. The average gold deposit, this is a hard number to try to generate. I've been looking to see if anybody's actually quantified it, but in my experience, I've been involved with 3 mines that have gone into production, and I'd say the average gold deposit at ore zone would be 150 to 300 meters in strike length. We're looking at a gold zone here, which is over 5 kilometers long. It just takes a long time to drill that off. So even with 300 holes planned for this year, we're looking at, it's going to take us until about Christmas to do all that drilling. I'm sure there's going to be a little bit of follow-up drilling. I'd anticipate an initial maiden resource sometime in 2021. It's just the scale of the system we're drilling, and there's not a lot of apples to apples comparisons. For size, I talked about Hemlo, but think about Malarctic. Malarctic is the biggest open pit in Canada. It's operated by Agnico Eagle. It was a 12 million ounce, 1 gram per ton $4 billion acquisition. So this is the big mama of kind of mining deals. So basically, it was bought for $4 billion, and they spun out a royalty on it at the same time, which formed the basis of Osisko royalties, a 5% NSR. But that thing is, the open pit is about 3.5 kilometers long. Right, we're looking at a system here. We haven't drilled it off yet, but so far we're drilling a panel that's about 5 kilometers long. So just try to get the scale sort of in that kind of context. Takes a while to drill all those holes. So I'd say, yeah, you're looking at 2021 to see our first resource publication.
And how big do you think that could ultimately end up being? Like, what's the potential without giving too much upside?
Yeah. That big, about that big. If you saw the picture in front of me, it was about that big. So I don't know how to answer that. Like, you just have to you can look at side by sides on other deposits, but the thing is, just anybody can do back of the envelope math. There's a bunch of it circulating on the internet. I know Tyron Breitenbach, for instance, is one of the analysts that covers us. Kevin McKenzie is another one. Phil Kerr. So that's Stifel, Canaccord, and PI. You can look at their reports. They're all sort of estimating what we might have based on early stage, the drilling that we're doing, this shallow initial maiden resource drilling. So you can read those reports, I guess.
Good answer, Chris. Well deflected. I like it.
I like this big, though. That's a better way to describe it. Is it that big or that big? Or is it off the screen? I don't know.
So, we're getting close to the hour clock here, but do want to run a little bit over and make sure that the one real investor on this side who's kind of got an overall market view, that we can get some real perspectives from what Matt's seeing and what his crystal ball looks like. So maybe, Chris, we can jump over to Matt now, if that's okay, and then save some questions from the audience for later. So while we're doing that, Lucy, let's have our third poll of the day. From an investment perspective, how optimistic are you for the mining sector in the next 12 months? Very optimistic, quite optimistic, neutral, quite pessimistic, or very pessimistic? And we'll rapid fire this in 30 seconds again.
It was fast.
Like where this is going. Yeah. All right. So let me tell you a quick little second about Matt while we're having this poll. Matt Zabloski, founder of Delbrook Capital. He's the managing director, of Delbrook, which he founded in 2010. He has over 15 years of capital markets experience, 6 of which were as a portfolio manager at Fidelity and Research Company, one of the largest asset management firms out there. At Fidelity, Matt managed over $1 billion of sector-focused capital, consistently ranking amongst one of their top-performing investment managers. So with that, we're at 30 seconds. Can we shut the poll down? 2/3 of people are optimistic, and 1/3 are very optimistic. So Matt, over to you. Share some thoughts.
Thanks very much, Brady, and thanks for including me in the call. I'll be very brief. I know everyone, we're getting towards the hour. But Delbrook, yes, we founded Delbrook in 2010, completely focused on the alternative asset space, equity for the most part, long, short. Really managed onshore and offshore. Onshore out of Vancouver, Cayman Islands for our offshore fund, focused on 3 core principles to investing strategies in the natural resource space. First being relative value, that's very low net exposure, trading, investing with low net exposure, so pairs trades, equity pairs, equity ETF pairs. The second strategy we take is event-driven opportunities. Those are shorter capital at risk, event-driven opportunities that our analysts uncover. And the third really being longer duration, directional longs or shorts, where we have capital at risk, both in the long and short duration bucket. Based in Vancouver, a good solid growing team here, 5 professionals. Performance has been relatively good. We run very low net exposure within the space, so we won't keep up necessarily in super bullish markets, but we awfully won't be down to the same degree in bearish markets. Fund's doing about 5.5% positive this year. We've done about a 32% annualized rate of return in our funds. So something we're very proud about is just consistent performance, limiting downside, very low standard deviation, very high risk-adjusted return. So, that was my 30 seconds on Delbrook. Just in the interest of time, maybe I'll pass it back to you, Brady, or open up for questions.
I got to stop you though. I don't want to, shortchange you, Matt. And I will say that, Matt is an investor Absolutely. But, you know, I think we first met, when did you open the fund? You said 2010. So we probably met in 2012 for the first time, Matt?
About then.
Yeah. And so Matt, one of the advantages that I see that Matt has is he's in Vancouver. He gets to meet all the management teams. He can meet all the board of directors. He has an inside track to the personalities that are running the companies. And I've heard him a few times express opinions on certain people, and positive or negative. But, you know, what an amazing advantage that he has, that, you know, he's got this platform to invest, but he also can meet the people, which you wouldn't have if you were operating out of New York or some other place. So, you know, he's really got that first mover advantage. And so he's got the one screen, but I don't think we should shortchange it. We don't have to end in 30 seconds. I'd like to hear a little more of your thoughts on this kind of market and how you're playing it.
Yeah, look, that's important, Jim. It's one of our big selling features, I think, is being in Vancouver with the base we have here. Also with the duration that we've been running. We've run through the worst of the bear markets, and we'll run through the best of the bull markets and then back again. You know, for us, the relationships we build, and especially within the context of this call, you know, the smaller cap names that we get to see grow into big caps, into large caps, and then, you know, sell themselves or move on to something else is very important for us. So, you know, being in Vancouver is a huge competitive advantage for us. I appreciate you hitting on that. It's something that, you know, we see the opportunities. We know the management teams well in advance of these stories going to Toronto or London or New York or Sydney or wherever. So relationships, especially amongst the small caps, are, you know, very important to us, and we continue to follow groups where, you know, we can build a relationship of trust, management being one of the most important aspects of smaller cap investing in our mind anyways.
Yeah, Matt, that was one of my favorite things about investment banking being based in Vancouver was it was almost like guerrilla warfare, right? You got to find these really interesting entrepreneurs with interesting projects before they hit Bay Street and the mainstream financial hubs, and you got to figure out how to really create some value with them, partner up early and get involved. So that those relationships that you've been cultivating and what you've seen here is exciting. Now, you know, just quick question then. I think you're probably the right guy to start really opening this up to the audience. But 2008, 2009, that's arguably the closest parallel that we as the exchange are seeing in terms of changes in filing activity. We saw through that period a 9-month decrease in original listing activity and roughly a 20% decrease in financing activity. So that's kind of what we're measuring ourselves against right now to try to track and you know, give as much clarity to our crystal ball as we can. What are you seeing out there, and you know, what's your 3 months, 6 month, 1 year kind of view on things?
Yeah, so it's funny. I mean, we managed through 2008, 2009, and those weren't great memories. Although we did okay during the time frame, it was still uncertainty. As it pertains to this sector that we're talking about right now, you know, I'd reiterate the importance of risk management. I'd reiterate the importance of, you know, not being long only. To us, you know, the resource space is, you know, huge opportunity set, but you need to do so on a proper risk-adjusted basis. You need to have your hedges and your shorts in place. I think that's key to the success we've had. Looking at this market right now, what surprised us the most is just the pace of a decline in February and March. That's something I don't think anybody anticipated, but you know, the importance of being an institutional manager is to tactically shift your positioning and your views. I think we've done that pretty well. You know, as I read more about the situation on the macro standpoint, you know, we're not gold bugs internally here, but if there ever was a time for gold to work right now, it would appear, you know, this is the time with the, you know, mass monetization of liabilities in the US and globally. We've shifted probably on a gross basis about 60% of our book globally to precious metals and related equities.
Sorry, I think if I can just interject here, I think we've got a question on the line from Jean-Marc of Riverside Resources. Do you have a question, Jean-Marc?
Hey, Jean-Marc. We just got a question from Jean-Marc.
I saw that hand up.
You should be sort of like, okay, I'm just gonna, you are now live, Jean-Marc.
Yeah, Matt, really, you say 60% has gone this way. Do you think that we've gotten ahead of ourselves. It's gone so quickly in the gold sector and people are pouring into it. You as a more balanced investor, do you think we're ahead of ourselves, or do you think it's really going to keep this momentum, or do you think maybe we're going to have a short-term cool off and then maybe a larger run?
So when I said 60%, the real number is 65% of our gross exposure, gross being a combination of long and short positions. So in reality, if you look at the current gold tape, our view internally is that the push up into the 1700 range has been done with less conviction by the market. So I think the market is stretched. It's very hard to call a gold tape on a day-to-day, week-to-week basis, especially with what's going on out there right now. You know, we pulled exposure down. That 65% gross exposure was skewed much longer in, you know, the back half of March and early April. So we're taking some cards off the table. Very important to look at valuations here in the context of current strip pricing. And quite honestly, I think there are some great opportunities on the short side in the mid-cap, large-cap equities. So the short answer is yes, we can believe that monetization will happen and we'll have $3,000 gold. I guarantee you we will. I don't know if it'll be next year or in the year 2035. But you have to manage in the context of what you have right now. And for us, it's you know, get some conviction, maybe on a pullback here to re-implement some of the long positions and take some of the shorts off.
And I think we have another question on the line as well. I think it was Raziel Zisman from Whittle Consulting. You wanted to ask a question earlier. I'm not sure if it was for Darren Klinck.
It was for Darren. Renewable energy in mining is coming of age, and you have a wonderful proposition. When do you think your geothermal project will come online, and what is the energy situation like in Guatemala?
Yeah, great question. So just for the rest of your viewers, that's correct. So when we acquired the Cerro Blanco project, it also came with a $60 million investment that had already been sunk into the geothermal project, which is just to the east of the Cerro Blanco project. We've done some technical work on that, done some flow studies, and it looks as though there's 5 to 10 megawatts of power potential there. Situation in Guatemala right now, again, you know, another tick for the country. Power is in good supply. They've brought on new power within the country here over the last 5 to 10 years. A lot of it has been hydro. And so the actual, you know, average power price in the country right now is between 5 and 6 cents a kilowatt hour. It's exported into El Salvador and Mexico as well. And so it's in good supply, but ultimately, you know, the government is continuing to look to move more towards renewable, like many, you know, jurisdictions and countries around the world. The base load power in Guatemala, there's a good chunk of it that's still coal. It comes from Colombia. And in the recent meetings I had with the Minister of Mines and Energy, it sounds as though as we get into the back end of this year, they'll be looking to do a power call that will actually put more emphasis on renewable energy, and geothermal is well placed from a baseload perspective. So I suspect we'll see some more movement on that towards the back end of the year. Absolute, you know, really unique opportunity to produce green power to really power a small footprint mine in Guatemala, and we're looking forward to that here over the next year or two.
Very cool.
Thanks, Raziel.
Another great, you know, another great soundbite as the world shifts to ESG, the reporting that we need to figure out how to highlight, right? The different things that mining companies are doing to reduce their footprint and environmental impacts. So that's awesome.
Yeah, for sure. More and more scrutiny on that, and so there should be. I mean, you know, as Chris was mentioning as well. I mean, many of us are raising, you know, young families, and you know, these are things that we should be teaching our kids. But you know, within a balance as well. If we want to continue to live like we do, then I think, you know, most of those kids are going to get to school on a bus or in a car. But how can we do that to really kind of reduce the footprint the best we can and still, you know, live in a way that we do?
Yeah. I mean, there's 4 times as much copper in your Tesla as there is in a traditional gas car, right? So everyone's got to keep in mind where those come from, to Chris's point.
And the lights on in our houses.
Yeah. Well, or, you know, the case for uranium, the fact that we're all doing this on electrical consuming platforms like Zoom and needing, entire server farms to be powered to be able to facilitate this. It's going to increase electricity demand.
Within 10 miles of my home, there are 2 nuclear reactors.
That explains it, Jim.
You know what? You are promoting disinformation, Chris Taylor.
I've watched this. I know how it works.
And I live in a place called Springfield. To be crazy
exactly. Say hi to Bart for me.
I am Bart.
That's how that one goes. What other questions do we have from the audience here? Anybody?
I'm not sure if you've got any last questions for the audience. I don't know if you want to make some closing remarks. Oh, hang on. Well, I'll allow one last question from. I'm just going to go to a gentleman called Benjamin Perez from Chile, and you're now going to be live on the line to go and ask the last question of today's webinar.
All right, Benjamin.
Okay, so hi everybody. Thank Minds and Money to have this time schedule for us, because Australian time zone is impossible for, I think, for everybody. 2 a.m. to jump in a conference is not a good deal. I'd rather be hanging out with my friends by Zoom, I guess. So anyway, so it's quite interesting to know about how things are going on in Canada, and how the money is getting into to projects. And do you have any overview of how things are going to be in Latin America? Because I don't know if you're aware, we are facing very strong curfew. I can speak in Chile. I work I'm a partner in a law firm in Chile, and we are facing very strong curfew that are jeopardizing some operations. So if you have any thoughts of what we can be dealing with, especially next year, that's it.
I'll make one statement about Brazil, if I can, really quickly. Obviously, Brazil has a different perspective than many other countries. We're monitoring that situation very carefully, really focusing on the safety of the people that would be working in the project in the area, particularly the town that we use as our servicing center, which is called Capitão Mor. There are no confirmed cases there. We're being careful. We're monitoring it, because if there is any kind of exploration program of scale and size, a change in policy from a federal perspective in Brazil would alter the program or shut it down. So we're carefully monitoring it. But just from a Brazilian perspective right now, we're going to be moving forward. So that might be very different than Chile. And that's all I have to say about that. Everyone's sort of looking like blankly at me.
Well, I guess from a Guatemalan perspective, we are in Latin America as well, Benjamin, and I think the government's done a great job, as far as really out on the front step, and putting a curfew. I know it's something it's very uncomfortable in our society, right? And it just definitely creates uncertainty. But I think it's working, and we've all got to work at this together. We're doing it today. We're all at home. The world's pretty resilient. There's lots of smart people out there that I think are working on this, but I'm not sure that any of us have the answers in terms of where it kind of goes over the next few months. But it's still lots of questions. But Matt, I don't know, how do you approach it from a markets perspective? There's Jim pointed out in his piece there was about 8 different sort of themes on the same sheet on a website yesterday, right? So how do you feed through all that?
Well, I think you focus on managing risk as it pertains to this call. I think people really need to be cognizant of the operational shutdowns we've had, be it Cobre in Panama, be it any number of copper mines in Chile. The examples go on, and the supply disruption you will have to certain commodities because of that. Certain commodities that were in deficit, now we have to rewrite and recalculate our demand supply models because demand has declined, but has supply declined more? The one thing I'd leave you with, and Darren, you know this from working on larger mine sites in your career, you don't just go turn some of these mines back on one day.
No.
If you bring them on care and maintenance, you're evacuating mills, you're evacuating, all sorts of different liquids, and when you re-implement these and turn them back on, it's going to take some time to bring these things back to any sense of normal production levels. So we're carefully monitoring the demand side, which has been knock on wood, surprisingly resilient. And I think on the back half of this, you'll see some real squeezes within specific commodities, because we just will not be able to fulfill supply. And there's traders who are playing those games right now, knowing exactly which commodities to buy up to drive prices higher, because the supply will not be there as it traditionally has.
Interesting point, isn't it? It's almost like a big ocean-going vessel, isn't it? Like once it's moving, you can't just turn it around in a dime. It takes some time. So
yeah,
that's interesting. Supply and demand, right? Economics 101.
There you go.
So I'm sure we can get into this discussion and continue that for probably hours on end, but maybe it's time that we wrap this up and kind of give a little teaser for what's to come next at 5 at 5. So Andrew, back to you.
Hey, sure. Well, many thanks, Brady. Many thanks to our guests and to the audience for dialing in. Our next episode on this side of the world will be on Thursday, the 7th of May at 5 p.m. British Summer Time. Another star-studded lineup of guests, including David Street of Tembo Capital, Craig Parry of ISO Energy, Tommy Horton of Gianni Minerals, and Thomas Dennin of Linkers Capital. So I hope you can all go and join us for that. Until then, stay safe. Thank you very much for your time.
Thanks, Andrew. Thanks, Lucy.
Thank you. Bye-bye.